Before we get started, we just want to thank Old Republic Surety for sponsoring this episode of Let's Get Surety, as well as NASBP virtual seminars for the 5th year in a row. For more information on Old Republic Surety, visit www.orsurety.com. Now on to our show.
You're listening to Let's Get Surety. Let me hear your bonding talk with Kat Shamapande.
Hey everyone, it's Kat Shamapande. Thanks so much for joining us for this episode of Let's Get Surety. Today I have with me my co-host, Mark McCallum, CEO of NASBP. Hey Mark, thanks for being on.
Hi Kat, great to be back.
Always good to have you on with me. And I'm excited about the topic we're going to be discussing today. I know a lot of our members at NASBP work in agencies that have both insurance and surety teams. We're going to be just talking a little bit about how those teams can work together and support each other and just improve interagency workings. And to do that, we have with us Danette Beck. She's partner and head of industry verticals and national construction practice leader at USI Insurance Services. Hey, Danette.
Hey, Kat. Hey, Mark. Thanks for having me.
Thanks so much for being on with us today. So Danette, before we kind of dive into this topic, could you just tell us a little bit about yourself and about USI?
Sure. So I've been at USI for 5.5 years now, and I have 30 years of experience in the insurance business. So I am one of those people that studied risk management and insurance at the University of Georgia. Go Dogs. And I have, it's a Bachelor of Business Administration degree from the business school there. So immediately upon graduation, I moved to California and I started with Sedgwick James, which is a predecessor company to Marsh. And then I spent 14 years at Aon in their construction practice, and then 8.5 years with Marsh, where I led the West Zone, which is Canada to Mexico, Honolulu to the Rockies. And I did that for 8.5 years. And then I moved to USI and I moved to our corporate headquarters in Valhalla, New York, which I always love that as my fun fact at a business meeting or a dinner party of where is Valhalla, New York. It's about 30 miles north of Manhattan. And I sit in our corporate headquarters reporting to our CEO now to lead all of the industry vertical strategy as well as the construction practice. So that's a little bit about me. I live here with my husband and another insurance family. He works for a wholesaler, so we're all in it on the insurance side for our family.
That's terrific. Do you want to tell us a little bit about USI?
Sure. So USI, we are a privately held financial services firm that is headquartered here in New York, and we are about $2.2 billion in revenue, both on the insurance, property casualty, surety, the employee benefits, personal risk, and retirement, and serving over 220 offices. And our construction practice, we have about 450 professionals across the United States that are handling business from everything from an architect and engineer up to very large general contractors and design build contractors. So we run the gamut from commercial, residential, infrastructure, vertical, you name it, and we touch it. So very highly data-driven, solution-based organization to help our clients make better informed decisions and provide the opportunity for them to grow their business and find more work.
That's terrific. So in your background, you kind of talked about the various spaces you've been in, and you've got primarily an insurance focus. Is that right, Danette?
That's correct. So the degree and really kind of the roles that I've had as I've grown up in this industry have been all on the property and casualty side, but both from a project orientation, so owner-controlled insurance programs, contractor-controlled insurance programs, and then also handling contractors of a variety of size with my business partners on the surety side, but have always been handling the insurance side of the business. That's correct.
So that may lead listeners to wonder how I ran into Danette. And I got to meet Danette at NASBP's Surety School back in 2020, I believe it was. Is that right, Danette?
I think it was, yes, because it was right before the pandemic hit.
I think that was
down to Texas, right, for Surety School. So as part of USI, one of the things that I love about our organization is it's very flat. So I report directly to our CEO, and I still have direct connectivity to our clients and our field team. So that was really important to me when I took this role, that I didn't lose the business side of the business. And so as the construction vertical leader, I also have responsibility for our surety team, as well as our architects and engineers and design professional team, and then also our projects. So in order for me to be a better steward of our team, I recognized that there was a skill gap that I had because I had spent the better part of my career only handling insurance. And so I thought it was really important that I send myself to Surety School. So I did.
Well, and Danette didn't just attend a Surety School. She was also the most outstanding pupil, or MOP, the winner for her class when she attended the Level 2 Surety School. So
very humbling. So thank you to everyone in the Surety School, in January of 2020 for voting me in. So thank you for that.
So Danette, from your experience in Surety School and kind of getting more depth into your Surety knowledge, did that help you as you came back and worked with the Surety team within your agency?
Well, it did. And so, I'll take a step back. So I've been exposed to Surety for longer than, Surety School. In previous days, I always felt that was incumbent that Surety professionals attend insurance meetings and insurance professionals attend Surety meetings because the conversation is different, but it's all financial. But it comes at it from a different perspective. And there are things that you can learn in each of those meetings that will impact positively and negatively your area of focus. And so being collaborative between insurance and Surety has been a hallmark of how I organize either strategically for our accounts or even individually when I was handling accounts myself. So after Surety School, though, and really learning the nuts and bolts, it even became more incumbent that I take that information and bring it back to the organization and make sure that our professionals, whether or not they're an account manager, they are a broker, they are a technical resource in claims and risk control, or they're on our Surety team or they're on our insurance team, that they understand the nuances that come with what Surety underwriters look for, what companies are wanting to do with Surety programs, that it all intertwines itself into an overall account, and that you can't leave one part of the account out of the conversation because then you may miss something. And let me give you an example. So for instance, if you have a client that would like to take some level of their own risks, meaning that they take a large deductible on their insurance program, typically those programs require collateral. And that can be done vis-a-vis a letter of credit or cash or an escrow fund, which requires money to be pulled out and set aside for deductible obligations. That could negatively impact their cash flow or their working capital, which then negatively impacts their ability of expanding or growing their Surety working program. So one goes hand in glove with the other. You can't have a discussion about alternative ways to structure your financing, your risk financing arrangement without having a conversation about what would that do on the other side with your financials or your cash flow. So that's just one example of that where tactically we need to be working together so that we can have holistic conversations with our clients.
Well, Danette, you mentioned, I think, earlier about being a risk management professional. So you're saying everybody needs to look at the bigger picture here, and that, all the different risks that may be addressed or need to be addressed, both on the insurance and the Surety side, as they will impact one another, correct?
That's correct, Mark. And when you take a look at risk management, really, insurance and Surety are only two ways to manage risk. Surety is a little bit more structured, being that it's required in certain situations, and in other ways, it is a way to manage the actual performance risk that you have on a job site, which, I think when you take a look at all of the risks that happen within construction, that looking at as a full picture is really something that we should be doing all the time. Now, you may not use Surety as a solution for certain projects because you've managed risk in another way, similar to insurance. Now, again, there's nuances within the insurance requirements that you have to carry in order to be in contract compliance. Same thing on the Surety side, but taking a step back and saying, okay, let's not run to insurance or run to Surety first. Let's talk about risk. And some of them are business risks that they will take on eyes wide open. But understanding what risk really means and then how risk can be managed is an art it is an art in and of itself in order to facilitate then the conversation around insurance requirements, insurance procurement, Surety requirements, and then how do we manage the Surety on an account?
I mean, I think that's a great perspective because, risk evolves over time, right? So you're always in each contract, each project is unique. And I'm sure in your career, particularly on the P&C side, you've seen different coverages evolve over time and what contractors need and the responsibilities that they're taking on and the need for additional insurance coverages. And then I imagine also the need for surety professionals to be aware of these evolving dynamics.
Absolutely, Mark. And in fact, NASBP did a whole session on surety bonds and private work that is really kind of it's not a requirement to have surety in private projects, but the protections that it affords, should you start looking at that from a budgetary standpoint, that having the conversation around how are we securing a project from a payment and performance standpoint versus insurance standpoint on private projects. I think that's a really another great example of why surety is important as part of the overall conversation on risk management.
Well, and I've seen over the last 5-10 years, also contractors deciding to get into different project delivery methods, which then means I think that they have to look at their risk and reevaluate it and see how they can best manage it. And if you're a surety professional, you're going to be one of that group of advisors to them. And I'm sure you're going to want to know enough to guide them to the right insurance professional to ask the right questions. Are you seeing that? Like, as a company may have been doing just kind of your general contracting, then they want to go design build, for example, and what the different considerations at play in that situation are.
Absolutely. And that is where collaboration is key. That, you're working with your client from a surety professional standpoint, and you see that they're now moving into design build, and the immediate reaction should be, I need to get the insurance side involved, because that is a very different risk exposure that your client could be taking on. I'm a big fan on, when you take a look at contracts, it's not necessarily what's written into the contract that you need from an insurance requirement standpoint, but what is the scope of work that you're being asked to do? And as we know, owners are pushing more risk to general contractors, and general contractors are trying to push risk to their subcontractors as a risk management strategy. And so when we take a look at what is happening, especially with supply chain issues, labor shortages, the cost volatility, inflation, interest rate, the regional banking crisis, the owners are now wanting to not be responsible for some of the challenges that are happening on projects, and they're trying to force or risk allocate to contractors and subcontractors those risks. And so when you take a look at what the contract says and the obligations underneath the contract, absolutely. Now, are there insurance products for all of those risk issues that I just talked about? No, there's not. But going in eyes wide open and allowing for some contract accommodations is also part of risk management as well. So as soon as that contract comes in, sitting down at a round table, everyone as part of those stakeholders are sitting down and saying, okay, what are the risks in this contract and how are we going to manage it? And self-managing risk is absolutely okay if you're not going to be in, if it's not going to put you in contract non-compliance, but really taking a look at what risks am I embarking upon and how I'm going to manage them is absolutely something that we should be doing, which is why I'm always a fan of, when you're reviewing contracts, is that you don't leave anyone out. Have your professional liability expert in there, have your casualty expert, your builder's risk or contractor's equipment expert, having someone on the surety side, that you're all looking at the areas of expertise that you're familiar with and making sure that you're not blind, you don't have a blind spot to something.
Right. I love that, the idea of having that team and their expertise getting together and then figuring out the complete package. So internally, you talked about having them in on some of the meetings. Do you conduct internal trainings for the different areas so they get a better appreciation of each other?
We do. Now, this is not a shameless plug, but we are firm believers in the NASBP Surety School. So we do internal training as well, but there is nothing that I cannot say enough about the level of education that sending someone to NASBP Surety School does. That gives them a very, quick trajectory on understanding the core components of being a surety professional. And then the refinement happens. So some of it is individual within our regions. And then we do have a formal training program that we do on both insurance and on the surety side with all levels in the company, on the account side, account reps, account managers, account executives, so that there's an understanding on what you need to be aware of. And so when you're in those meetings and that contract gets pulled up, that you're like, aha, this was the question that was mentioned in that training session that said, if you hear this, let's have a broader conversation. So I think training, that our industry has done not a great job at doing, and that it's individual upon companies on how much time they're going to invest in talent at all levels, not
Right.
just the recent graduates, which is why I think having Surety School as an option to augment what teams are doing internally, I think it's been a phenomenal thing for us to do. So we find it very valuable.
Well, so I'm going to switch a little bit. You talked about talent. So I'm very curious. You've seen both the PNC side and the surety side. How would you advise a young professional if in looking at their kind of their proclivities and their interest, like, what's a good way in terms of their route in the PNC world versus their route in the surety world? Do you see any difference in the personality types or the skill sets, or do you think everybody should kind of get an exposure to both?
Well, I'm a firm believer of getting exposure to both, but I do think on the surety side, absolutely having a financial acumen is something that's critical, right? Because it's all financial related. It's credit. That's what we're in the business of. But more now on the insurance side, there's a much more data-driven financial conversation happening now as well. So that skill set is now translating much more over into the insurance side, which I think if you look at it, 20 plus years ago, there was more technical nature around coverage. So the contract review, the coverage side of it. But now that we're in such a data-driven environment, and insurance carriers are requiring that you have the data-driven conversation, and really having a conversation with a client around what financial program they're going to be on. It's math. It's all math, right? So I do think that it does translate over. So from a proclivity standpoint, though, is, I do find there are different personalities that go along with the insurance side or the surety side. And I don't want to forget the brothers and sisters out there that do both, because I do recognize that.
Yeah.
And we are starting to see a little bit more of that, where you're starting to see some people that are doing both insurance and surety, where, I don't have an opinion on whether or not that's right or that's not right. But, I think that, the specialist, what I'm more concerned about is specialization in construction, is that you have to have a proclivity for construction and what sector of construction, because infrastructure contractors are very different than a residential roofing contractor. And so having the time to really look at where your passion lies, that's going to come through, and then that's going to give you the drive, the motivation to do the extra mile and learn about the nuances of that sector of the business, but then also give you the tools from the financial standpoint, the nuances that are in those sectors of the business as well. I think that's all important. So I don't think I really have an opinion on the personality of I'll probably get myself in trouble if I say there's different personality within surety. There's more characters in the surety side than but they're definitely better storytellers, I think. So I don't think I think I see a variety of personalities in both sides of the business, but I think it more has to do with passion, because that passion is going to drive to do innovation and dig in and really help those clients. So that's where I see the differences, and where I see really successful people in our business. It starts with a capital P, and that's in the passion, right? And that drives to the knowledge.
Right. Yeah. I sometimes hear people say, surety is relationship driven, and they may say PNC is more price driven. Do you think that's true? I love that you said, passion is important and can be a common denominator for success. So are those true characteristics, or maybe,
Well, we talk about this internally. I think it's a great question. And I'm not shy to tell, our team members, and frankly to clients, is that we recognize that it is a very much it is a more relationship driven business on the surety side, because it's financially related, and with their personal indemnities involved, right? There's there is definitely a stronger personal connection because of some of the requirements within the transaction is what I'll say, that doesn't necessarily exist on the insurance side. But I will tell you that there's been an evolution over the last 10 to 15 years. The price, is it always going to be a motivator? Well, our contractors have to translate price in their bids. So insurance and surety costs go in their bids. So if they are not the most cost efficient, we're not putting them at an advantage to win more business. And if they don't win more business, then they can't keep their employees paid. So there's a whole knock-on effect. So it is not lost on me that price is always going to be a part of the conversation, because they need to be as price efficient as possible for it to go into the bid. But there's also been a shift on having a much more data-driven conversation with brokers, and that it's not necessarily my neighbor that I'm going to do business with, because skilled labor shortage, supply chain issues, like we can go down all of the challenges that contractors are facing right now, that relying on that familial relationship may not be giving them the best program. And if you don't have the best program, then you're losing money, and your cost of insurance is going to go up, and your cash flow is going to go down. And there's all of these other knock-on effects that are happening on the insurance side that are moving it to a closer of a relationship that the surety side has had. And really, I give the surety industry a lot more credit, because they've done a better job of explaining the value that surety provides to a contractor than I think historically has been done on the insurance side. I think they're equally important, and the conversation should be equally, the conversation should be that on insurance and surety should be equally important, but I just don't think the insurance side has done as good a job, and we put ourselves in that position.
Well, I know, somebody could say that both surety and property and casualty are on cycles, right? But they're not necessarily in tune, those cycles. So does that provide an added dimension for you when you're working with clients to understand that the market conditions may be different on the P&C side from the surety side?
Sure. And it's very interesting when you have macroeconomic drivers that we're now at a point where actually both in insurance and surety are potentially going to be in stressful situations, depending upon, the next 24 to 36 months and what happens with our country, right? So it's not necessarily usual that happens. Usually there is, I take that back. Because in the last financial crisis, we were also having capacity issues because the insurance side was being impacted from the surety results. So there have been times, I'll correct myself on that both the insurance and the surety are in the same challenged environment, is what I'll call it. But I would say that because of the underwriting process in surety and the diligence in the underwriting process in surety. So, we always say this, right? Surety underwriters write to a 0% loss ratio. That is not the case in the insurance. On the insurance side, they know there's going to be losses, right? If I told you that I go and broker to carriers that we have zero losses, right? They will laugh at me, because that's not necessarily what's going to happen. So we know there's going to be losses. And so the volatility on the insurance side, it happens more often than volatility on the surety side. There's so much more diligence around it, when losses start happening of, okay, what type of losses are occurring? How are they occurring? When are they occurring on a project? And with what type of contractor? The surety industry seems to surround that pretty quickly and figure out what's going wrong. And on the insurance side, what geographic region are you writing in? What jurisdictional issues have changed from a legal standpoint? So there's a lot of nuances that go into what's happening on the insurance side that happen, I think, quicker sometimes. And it's, we don't have a capacity issue. So if one market decides that they don't want to write a sector of business anymore, we still have plenty of other markets that will do it. It's just, is it going to cost more money because there's fewer number of people offering that type of that type of product? I'll give you an example. So a couple of years ago, the umbrella market started to go a little bit haywire because of these nuclear judgments. And nuclear judgments are the really large judgments that go way beyond what expectations were. And in the umbrella market, the way that the claims were being accounted for, or the actuarial kind of computations, that it was not really consistent across the platform. So all of a sudden, losses started occurring where they weren't pricing for those losses based on actuarial data that they had. So all of a sudden, there was this very quick course correction from a premium standpoint. So suddenly, the delivery of bad news was happening on a daily basis in the construction industry. So getting ahead of it, and to your point of how do we give market trends, that was difficult because it was happening so fast that it was hard to keep up with the conversations in a timely manner. I had a contractor tell me one time, and I always use this in our internal conversations. He goes, I have a no surprise clause. Like, you can't surprise me with something because we're passing along costs in our bids. So if you give me a surprise a week, a month, 45 days before my renewal, I already have bids that are outstanding and I can't price adjust for it because the numbers is the number is the number. So we talk a lot about that as the no surprise clause in our service delivery model, because what we do and our timing of doing it could negatively impact not only one bid, but multiple bids. And if they win all of them, right, then we're putting profit margins at risk because it hasn't been priced for. So it's really incumbent upon us from an industry standpoint is to get ahead of those market trends and try our best to deliver the news in a timely manner as we're getting it from the industry, and then proactively seeing what's going on from a predictive analysis standpoint so that we can prepare our clients better. So it doesn't necessarily happen at the same time, but I think the approach is the same for both insurance and surety. There's a lot of conversations right now about subtrades and their health and wellness from a financial standpoint. We believe that there's a direct correlation between I do. I mean, I don't know how many of the we of me, but I believe there's a direct correlation between the quality of a financial health and wellness of a sub and the quality of their work, what then leads into construction defect or payment problems or performance problems, that it's all interrelated to each other. You can't have one without the other. So if we have a client or a prospective client that we see, or a sub of one of our clients, that they're not paying their subs on time, they're delayed in paying their own employees, or suddenly the materials are delayed getting to the job site, or, all of a sudden, they're trying to get, schedule accommodations or, right, you start seeing those red flags going up. And it's not just a surety issue you're looking at. It's like, we need to take a look at the work that they've done, and was it done correctly? Because that could lead to a general liability claim down the road, or a professional liability claim down the road. So it does go hand in hand.
Yeah, and I think it really just exemplifies why it is so important to have an understanding of the other market when you're in one, and they're not necessarily in the same place at the same time.
Right.
And you spoke about how internally education's a big part of how you encourage that collaboration between the teams. Is there anything else that's important to that process and that collaboration?
Well, I mean, we're big believers in collaboration. We use the word enterprise. So the enterprise is our huddle platform where we regularly cross-check and analyze what are we doing for our clients. Are we doing everything? So I look at it as like build a mousetrap, then break it down and see if we can build a better mousetrap. Because I think a continuous improvement environment is going to allow for me as an individual and our company, and I encourage all the surety professionals out there, is that, in our day and age and how fast our industry is moving right now, and with technology that is being introduced and adopted, that, finally, I think our construction industry as a whole is starting to adopt technology at a greater rate. I think we still have a long road to go, but that as that happens, that's also going to open up new risk issues, but it's also going to create an environment that we're going to learn faster. So the pace of what our work is doing and the advice we need to give our clients is going to start increasing as well. So I think in addition to collaboration, I also think it's incumbent upon me as an individual, and I think all of our listeners today, is to always strive to learn more, to learn something more tomorrow that you didn't know today, to ask questions. And if there's a concept that you don't understand, that you slow it down and you understand what is the art of reading, reading the terms of the scope of work, the terms of the contract that you're signing, the terms of the surety bond form that you're looking at, the terms of the insurance contract. That cannot be a lost art. That cannot be, go over to AI and have it at ribbon. Will AI help us do it faster and as a first pass? Absolutely. But the individual art of making sure that we're experts in our field and that we continue to strive to learn more is something that I think we need to continue to do. From an education process, I always believe that there's never going to be that I've learned everything there is to know. Right? I think that there's always going to be something that I will be striving to learn, whether or not it's a new product offering in the surety marketplace or the subcontractor default insurance marketplace or project loss insurance marketplace. There are still new products that the surety industry is trying to develop that will allow for protection on projects that may not lend itself from a surety standpoint. But there's also nuances that the surety industry is teaching us on the types of accounts that they're looking at and what additional controls that they're looking for, or financial ratios that they're looking at that are better indicators or predictors of what's happening from a health and wellness standpoint. That there's always going to be things that we as an industry need to make sure that we are ahead of, so that then we can help our clients be proactive as well. And I use this analogy a lot, is that the more that we can help clients look through the windshield of a car instead of the rearview mirror, we're going to be better helpers, right? We'll be better helpers.
Right. The importance of anticipating needs, right?
Yeah.
And AI can't do that, at least not yet, right?
Right.
So while I've got you, I have to ask, I'm just curious, since you're seeing both sides, is PNC or Surety further along on digitization of, i.e. policies or bonds, or are you seeing any kind of a difference?
That's a good question.
And is there something that one could learn from the other?
Yeah, I think that's a good question. I think that, the pandemic did both of the sides of the industry as a service in that area, is that we had to adapt very quickly, right? So insurance carriers, sureties, insurance brokers, surety brokers all had to adapt overnight, literally.
Yeah.
So I think when you look at systems like SurePath have done, and other, online management platforms then allow for surety bond electronic delivery of it, that I think that's helped out a lot. Do you think the insurance side started earlier on the delivery of insurance policies and housing electronically provided policies in a system? But I think that there's still a long way for us to go on both sides. I don't know if I have an opinion on if there's one ahead of the other, because I think if you look at certain components of it, it's like, okay, well, we're ahead over on this side, but in this area, we're ahead over on the surety side. So I think that both sides, that there's still, as we talk to vendors in this space, in the InsurTech and the insurance tech and surety tech is what I'll call it space, is that they're striving to, do as much automation, I think, as possible to make it more efficient for our teams to do the business of the business, right? And to make it easier for our clients to find things. I do think that as there's greater adoption for digital surety bonds, that will be great, right? So that it's not an actual physical seal that's being put in a FedEx envelope and then FedEx to the client, or, hand delivered in from a car standpoint, right? So I think that, really.
I know.
We've all been there, right? The bid's at 2:00, right? We need the bond, and so someone's got to drive it down to the job site.
Yep.
So I think that, the more that we can create efficiencies so that it doesn't cost that much money, right? FedExing something, there is a cost to that, right? And as we look at how do we make things more efficient and more cost effective, I think both sides of the business that will continue to innovate. I still remember, this is a little while back, but I used to get policies delivered by DHL. So DHL is the most expensive overnight delivery. I was like, I don't know why you're DHLing me something. I'm certainly not going to read the policy the day that you're sending it to me. So it's really not that important to send it via that method. Like, there's got to be a better way, So, I will say the surety side, those costs do impact, because we don't necessarily need to have a policy in our client's hands overnight for a bid, right? It's a certificate of insurance. And we email certificates of insurance all the time. So I think there has been an advancement on email certificates versus the old days where you actually had to type them in a typewriter on a 3-part carbon, function. So I do think in that instance, from a bidding standpoint, there's been an ease of delivering, project specific quotes or, certificates of insurance in order to facilitate the bid more so than the surety side. But there's been way advancements on the surety side that have been created there to create efficiencies. So that was a long answer to your short question, but
no, I appreciate it. And we have a lot more to do, but it's
Yeah.
underway, and that's the nice news. Is
I
that
think
there are
it's
a lot
also
of
incumbent
efforts
on our
underway to
partners
get
too,
there.
right? Our carrier partners, right, as they
Yes.
innovate
Mhm.
and they create better ways to manage the document side of it, right? And how do we transact the business, right? That's going to help us as well and create client portals. And I think one of the most inefficient parts of the process is the submission process, right? So the financial data,
Right.
the WIP, all the information that goes into it, that's still largely done vis-a-vis an email with attachments instead of better ways to transfer information securely, right? And as
Yeah.
our own platforms become more secure because we have to because of cyber issues, that
Right.
I think it's going to really create the next generation of how we move data from one company to another company in a manner that is much more secure and much easier to digest that information in a quicker manner so that decisions could be made quicker, and or conversations happen of this was missing, that was missing, or tell us a little bit more about the situation that you've submitted to us. So I think that those innovations are quickly advancing because of the need to keep data secure. More specifically on the surety side because of the financial nature of the information.
Well, Danette, it's been awesome having you on and chatting with you today. I think I know I learned a lot, Mark. I think, did you as well?
Absolutely.
Yeah.
Yeah.
It's been a lot of fun chatting with you and learning more about how we can work together with insurance and surety teams. And just how the two types of business can work together to help our contractor clients. Thanks so much, Danette.
You've been listening to Let's Get Surety, brought to you by the National Association of Surety Bond Producers. For more information about the NASBP and its members, visit nasbp.org.
Before we go, we just want to say thank you again to Old Republic Surety for their generous support in sponsoring this episode of Let's Get Surety. For more information on Old Republic Surety, visit www.orsurety.com.